you will have a basic background knowledge to decide which tax regime to choose. And with this understanding, there is only one critical step to understand. What are the deductions which are allowed for NRIs? So don't ever fall into the trap of making an investment just by thinking about tax, and know what actual provisions are. Hello everyone, welcome to Keerthi's FinFo NRI community. I am CS Keerthi. I live in Dubai and I run the consultancy, a firm which is specialized in NRI services. I am CS from India and also CIMA strategic level from UK. I am also a SEBI registered overseas MFT. Every week I bring an explainer video on various topics related to NRI issues in this channel. If you are looking for finance, FEMA, tax related topics, then please subscribe this channel. NRIs? Now it is tax filing season. So if you are thinking as NRI which tax regime you must opt for, is it old or new, then this video is must watch for you. Before that, please watch how NRIs are taxed here, because understanding the residency criteria to establish your residential status as NRI or resident and also knowing the source-based taxation is critical. So when it comes to source-based taxation, which I have already discussed in the above mentioned video, you will have a basic background knowledge to decide which tax regime to choose. And with this understanding, there is only one critical step to understand. What are the deductions which are allowed for NRIs? So in this video, let's first analyze what are the deductions allowed for NRIs and what are the tax structures, so that it is easy for you to make an informed decision which one to opt for, old or new regime. So stay tuned till the end. Like residents, NRIs can't take all deductions under IT Act and very few are allowed. So let's see what are these deductions. These are permissible expenses which you can use to reduce the gross income. And if you're thinking what is gross income, it is a sum of all income sources, which I have explained in the video how NRIs are taxed. Let's see one by one what are these deductions. See, under section 80C, the cap here is to claim, or maximum limit is 1.5 lakhs. So 1,50,000 rupees. So what and all are the personal items or heads of expenses that you can bring under section 80C to avail this benefit? See, if you had bought life insurance policy or paying premium for yourself, spouse or child, this is allowed. Remember, the policy premium should not exceed 10% of the sum assured. This is the condition attached to it. Secondly, tuition fees. If at all your kids are getting education in India, in any school or colleges, you can take advantage of. Third one is ULIP. It's everyone's favorite because insurance and investment clubbed and offered under same umbrella, and you think that this is the best plan, right? You can have a twin benefit, jokes apart. From taxation perspective, premium paid towards children, spouse, ULIPs, this is also eligible. Lastly is ELSs. ELSs also have a 3 years mandatory lock-in period, but investment done is also qualifying for tax deduction under 80C. It is required to know that entire 80C deduction maximum limit is capped at 1.5 lakhs. So it's not for ULIP 1.5 lakhs, for health insurance 1.5 lakhs, for the education you don't add like that. The total together how much you can claim is 1.5 lakhs. That's it. So now you have to decide whether you are making this ELSs, ULIP and all the investments just looking at the tax advantage, or whether you are having some source of income which you really want to avail some deductions and you're just tailoring to the extent of 1.5 lakhs. So don't ever fall into the trap of making an investment just by thinking about tax, and know what actual provisions are. So let's move on to our second deduction. It is section 80D. If an NRI has paid premium for health insurance for himself, his family or parents, then also there is a tax benefit attached to it. If you, your family or parents are below 60 years of age, then it is capped at 50,000. If at all of you are above 60, then it is 60,000. If at all your family is below 60 but the parents are above 60, that means 55,000 is a cap. Next deduction is section 80G. There are some donations which we are allowed to make and which qualifies for deduction under IT Act. Government had attached the tax benefit so that individual is encouraged to make donation, contribute towards charitable purpose. What you have taken from society, you think of returning to the society at least partly. Depending on the ultimate organization where the donation is made, 50% 50% or entire 100% donation is allowed. So after donating, you as a donor should obtain ATG certificate from the charitable institution or receipt which clearly shows their address, name, PAN and all other necessary details, amount involved, etc. So any individual HUF including NRIs, firms, companies can claim deduction under ATG. Cash donation exceeding 2000 can't be claimed here, so always prefer online or check mode. While filing ITR, you may find this table A where 100% deductions are allowed without any cap, and in table B where eligibility is just 50%. Table C where the donations are 100% eligible but there is no qualifying limit at all, and the table D comes with 50% deduction but there exists some qualifying limit. I know this may look really complex and they need documentation also. If you need any kind of professional assistance for filing your ITR, please reach out to us by clicking the link given in the description. We are more than happy to help you. So at we are happy to assist and already assisting NRIs around the globe in resolving their tax queries. So let's move to the next deduction, section 80E. Here NRI can claim the deduction of interest paid towards education loan. The loan may be for NRI himself, his children, spouse. So don't confuse interest with principal repayment. Up to maximum of 8 years, this deduction is available. Now you know all these deductions. Let's move to the IT tax slabs. For NRIs, unlike residents, there is no relaxation given based on the age. So whether you are 20, 40 or 8 years old, you are going to be taxed uniformly. This is which is given for NRIs. This is the old tax regime table. Now, without understanding the tax rate, you will not be able to make a better informed decision. So how the old regime is? Up to 2.5 lakhs, nil rate. 2.5 to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. That means above 5 lakhs, you're paying 20%. And above 10 lakhs, 30% you're paying. The surcharge rate is also applicable for NRIs. That is 10% on 50 lakhs to 1 crore if your income is ranging here. And 15% surcharge on 1 to 2 CR. 25% between 2 to 5 crore. And above 5 crore, 37%. So if you compute, maximum rate applied at the highest level can go up to 43% under old regime. Now, the new regime which is effective from 2023. Here the slab is kept little wider. So up to 3 lakhs, see there is no tax. So instead of 2.5, here it is made 3 lakhs under the new regime. It is nil rate of taxation. 3 to 6 lakhs of income, 5%. 6 to 9 lakhs of Indian sourced income, that means 10%. So here you will observe how wide range is kept. Then 9 to 12 lakhs of income if you have, it is 15%. So just consider this. In old regime, direct 20% was applicable for the income group. But here 9 to 12 lakhs means 15%. And 12 to 15 lakh, that means 20%. And over and above 50 lakhs, 30% is a tax slab. And even the surcharge, there is actually a minor change in old as well as new regime. There is no much change at the base level, but at the highest level, yes, there exists some changes. Because less than 1 crore, it is 10%. 1 to 2 crore, it is 15%, but exceeding 2 crore, now there are no further slabs here. It is capped at 25%. 25% is the maximum surcharge. For high income group, this is going to be a breathing space actually. Please note it down. No deduction is allowed in new tax regime. Only exception is section 80 CCD, where even NRIs, if they have any contribution towards this NPS or any government notified pension plans, this is qualifying for the deductions. Other than this, no other deductions like you have seen earlier about the deductions or the health insurance or ATC. No, you can't claim under new regime. In case if you don't have any deductions eligible, then it is making so much sense to choose new regime. We NRIs mostly have either FD and rental or capital gain as a common income source. So most of the time I have also seen that they have coverage under insurance, international insurance, and majorly it is only NRE deposits. Very rarely that people have NRO deposits. So in all these cases, new regime is only better. Unless opted, since new regime is called default regime. That means this is going to be applied anyhow unless you are choosing the old one. What happens is if you miss the deadline of July 31st for filing the ITR, then default tax regime only comes into picture. So you should decide which tax regime you want looking at the deductions, investments that you have made every year while filing the return, unless you have some income from business and profession from India. So there are some couple of miscellaneous points which I really want to discuss here because this will help you a lot. It will set a background for making any informed decision. So first one is basic limit exemption. As an NRI, one more critical point which you have to remember is we really don't have benefits of exemption limit if you have just short or long term capital gain. That means even if you have 1 rupee capital gain, you can't say that it is below the exemption limit, but you have to file ITR and you are liable to pay the tax. Second one, ITR forms. ITR 2 can be filed in case of any income other than the business and profession. If you have business and profession income in India, then ITR 3 is mandatory. Third one is advanced tax liability. Even as an NRI, if you are coming within the purview of advanced tax liability, that means your tax liability is more than 10,000 rupees. Then there are some due dates. That means before 15 June, you will deposit 15% of advance tax. Before 15 September, 45% of advance tax. Before 15th December, 75% of advance tax. Before 15th March, 100% of advance tax. The last point is double taxation avoidance agreement. If at all you end up becoming tax resident, where you are required to pay tax under 2 countries, so this comes into place. It is not straightforward process. You really need a professional assistance in case if you become tax resident under both the countries, because in order to understand, interpret the provisions clearly with clarity to take a stand and to claim the relief, you cannot do it by yourself. You have to take a professional opinion. In case if you are looking for any kind of DTA related assistance also, please feel free to reach out to us. Either you can go and fill the form in www.keerthisinfo.com or fill the link which is given in the description. Our team will get in touch with you. But you have to remember that in case if at all you end up becoming the tax resident of both the countries, where you don't have to think that in both the countries you are paying tax and it is unfair to you, but there are provisions and you are actually coming within that TTAA and that has to be applied. So many tax credits, exemptions, reliefs are specifically mentioned. Depending on DTAA, interpretation has to be made and stand has to be taken. These are all the miscellaneous points that you should be aware of. Now you know why ITR filing is must. It may be absolutely necessary also if you have capital gain or you want to avail some double taxation avoidance agreement relief or claim refund or simply to establish residential status. If you are looking for any professional assistance even while filing the income tax return, don't hesitate. Feel free to contact us by filling the form which is given in the description. Our team will reach out to you. I hope this video had given some clarity for you to know about the deductions and the taxation structure under old and new tax regime and will help you to make informed decisions. See you next week with more such interesting video. Till then, bye-bye.